It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. You're back again. Tyrone Jackson, the wealthy investor. I see you just can't stay away from me. I appreciate it. Hey, you know how I'm always talking to you in the stock market about how much money there is to be made and that trading is a skill, and like any skill, you've got to get better and better and better? Well, the people that we're talking about on today's show all made themselves billionaires with a B, right? How did they do it? They got good at something that earns a lot of money. Isn't it interesting that we all know people who work really, really hard in their life to provide for themselves or their families, but they didn't choose a profession that makes you a billionaire? Why would you do that? Well, there are reasons for that, but that's why I'm always talking to you about your consciousness, your belief systems around money, because there are no limitations on how much money you can actually earn if you perfect the skill of trading and investing in the stock market. Now, I have found that when it comes to actually trading online, a lot of people have an expectation that's actually false. And that expectation is you will never, ever lose money as a covered call writer. And that's simply untrue. You are going to lose money. There will always be stocks that reverse, where the story changes, the revenue changes. But what you want to get good at is picking as many winners as possible. So when I first started teaching live, I would say to people that if you choose 7 stocks, one of those 7 stocks will betray you. That's back in my biblical days, right? So I would use biblical references to trigger people's memory. So the idea is that even when you don't get it perfect, you can still become a multimillionaire in the stock market. So today, as another way of inspiring you, I thought I would talk just a little bit about a few people who've made themselves billionaires with a B, because, well, millionaire is kind of old if you live in the world of wealth. Now, many of you listening are actually thousandaires. You ever think about that? You're a thousandaire. For many, if you have more than $1,000 in a savings or in a trading account, congratulations, you're a thousandaire. But you really don't get rewarded for being a thousandaire, do you? People don't say to you when you walk into a room, man, those thousands of dollars look good on you. Why? Because it's very common to be a thousandaire, right? Okay. Well, in the world of trading and investing, millionaire status is very common. It's really not that difficult to make yourself a millionaire or multi-millionaire, meaning you have 2 million, either under management or in your retirement account or what have you. That's becoming more and more common. When I'm teaching live, I talk to people about being a millionaire, and then I look around the room and I realize, oh my God, the millionaires are already here. They're striving to be multimillionaires. So I'm happy that my program attracts that, and I'm happy that people who are interested in following my approach to the stock market have an eye towards being a millionaire. Now, I'm just going to tell you this, and believe me, I take a lot of heat from this in the media. Yes, the media listens to this show because people say it can't be as easy as what Tyrone Jackson has espoused, but they're wrong. The fact of the matter is, building $1 million net worth in the stock market is not difficult at all. Not when you have a stock like Apple that consistently goes up 100% every 5 years. Being a millionaire is not that difficult when you have a stock like Home Depot, which consistently goes up 100% every 5 years and increases the dividend. It has never been easier to make yourself a millionaire, but here's the key. You have to hold assets. Stocks are assets. So if you can hold a stock that tends to double every 5 years, you're going to get richer. Please, let's not make this thing very, very difficult. It's not difficult, but most people that I actually teach want more income, more residual income, so they can either live off that income or decide to reinvest it in the stock market. So the Wealthy Investor program and the Wealthy Investor approach to the stock market feeds two goals. Hey, do you need monthly income on a residual basis? And are you interested in being wealthy over time, 2 to 5 years? Okay? So I am very proud of the amount of people who have become millionaires and multimillionaires in the Wealthy Investor Program because I set them on a course that's very easy. If I can do it, you can do it. Let me explain to you step by step by step where the market is and how it works. So you should be very excited and motivated to listen to the rest of today's shows because you should be motivated and excited to listen to the rest of today's show because you will now understand how certain individuals are not thousandaires or millionaires, but their path to billions, okay? And their billions will be passed on to their family, their children, their grandchildren, and their children's children because it's all about success in the stock market, which means wealth is nothing but a series of positive habits. So, we're going to talk about some people who have made themselves billionaires and done very well. You can Google them if you really want to learn more about them. Just before I start out with our first billionaire, I want to remind you, these are people who do not seek fame, right? When you're growing money, you're not out trying to get your own television reality show, right? It's rare that billionaires seek that out. Most of them like to be in the shadows, and the people who need to know them, other people in the money world, know them. So as I go through each one of these billionaires, don't be shocked if you've never heard of them, because perhaps you don't follow them in Forbes magazine and money magazines where they are frequently quoted. But they do everything they can to stay out of the media until they reach their goals, and sometimes the media just won't leave them alone. And who's talking to them more than anything else? The financial media. So sometimes if you read the Wall Street Journal, you'll find these names quoted over and over and over, but they're not in People Magazine and Entertainment Weekly. You ready? Bill Ackman. Now, I want to make a distinction here. There are some people who make billions actually trading, but most people on Wall Street make money holding stocks for a longer period of time. So if you look at a guy like Bill Ackman, when he's going to start an investment position, he may go out and buy 5 million shares of, let's say, Apple, with the intention of holding those 5 million shares for what? Over a 5-year period. Now, in the hedge fund world, where people are planting seeds with money to make it grow and generating income, a hedge fund protects itself against downside risk, against the shares actually dropping, and they make money when a stock drops. They make money when stock stays the same or it goes up. So part of any hedge strategy is holding something for a time frame of usually 5 years, right? I don't know why that's kind of like the industry standard, but the reality it is. So in order to grow the amount of funds that you're actually managing, you need to show a potential investor a track record. That's why most of these hedge fund managers have been doing this for 20, 30, 40 years, because they can say, go back and look at my record of growing money, and then that attracts more investors. Get it? Okay, so Bill Ackman is a guy that will take very large positions in Dow and S&P stocks and hold them for a 2 to 5 year period. And then when those positions do well, they add to them every single year. They don't use necessarily buy signals like we do in the Wealthy Investor Program, but they have a methodology and an approach. Now, do you think a guy like Bill Ackman, by the way, whose net worth is $3.5 billion, what does that mean? If you took away all of his expenses, what he would have left is $3.5 billion. Do you think he got there overnight? No, probably the first 2 to 5 years of investing his money and other people's money is where he made the most mistakes. But after doing anything for 5 years, you get good at it. You get good at choosing winners. You know when a good stock split comes up, how you should take advantage of that. You understand that you're investing in companies that have a history of raising their dividends, as well as having that top line revenue growth that we're always talking about. So I love Bill Ackman for his discipline. And by the way, discipline is boring. It's like going to the gym, right? You know, Wednesday, Thursday, Friday, and once on Sunday, if you're into working out, you have a schedule and you stick to that schedule no matter what. Well, financial discipline is the same thing. I love it when I meet people who want to be rich, but yet they don't have a steady place to live. They don't always have an income from a job. They desire financial stability, but yet their life isn't financially stable. What you do in your life is what you're going to do with your money. So if you have a 401k and you're always contributing, guess what? You're going to be richer because you're investing during the ups and the downtime. Right? If you get a Christmas bonus, you always take a little something and you put it aside in that retirement account. That's discipline. A guy like Bill Ackman has mastered that. And so therefore, if he's in the business of managing other people's money and he has a track record, more money will flow to him because in the world of wealth, you want a good money manager who has a track record of being stable. So that's why Bill Ackman has a net worth of $3.5 billion. He's really good at picking good stocks, but he picks good stocks on a regular basis. His job, in a sense, is kind of boring because now he's got to learn a little something about the economy. He's got to read all those financials on a quarterly basis. And he has a research department that tells him the history of any particular stock that he wants to choose and take a large position in. But he's disciplined enough to do the same thing over and over and over and over again. Now, the next guy on the list is Robert Smith, right? And he runs a company called Vista Equity Partners. And he's an older gentleman. His net worth is $4.5 billion. He runs a hedge fund. And how is he being funded? Okay, so a hedge fund basically takes very wealthy people's money, pools it together, and uses 2, 3, or 4 strategies to make that money make money, and then the money that is made from the fund is reinvested. So if you look at a guy like Robert Smith, where does he get his money from? Mostly from pension funds who will loan his hedge fund money for a 5-year period to get a fixed rate of return. In other words, if I were to borrow $5 million from you and say, I will give you 10% if you let me hold your $5 million over a 5-year period, you'd say, wait a minute, I'm going to make $500,000 off this $5 million and you'll give it back to me? Yes, because I know how to take that $5 million and get a 50% return on it every 52 weeks. That means I'm going to pay you off and keep the difference. Do you get it? Right. So most hedge funds are borrowing money from pension funds to give the pension fund a guaranteed rate of return. Now, it gets a little complicated in here because not only can a guy like Robert Smith get money from pension funds around the world, he can also go to other funds that specialize in investing in funds. And those funds, oddly enough, are called fund of funds. Hey, if we fund your fund, how much of a guaranteed return can you give us? And we'll get a piece of the fund overall. In other words, if we give you $50 million to manage, can you guarantee us a 5% return? Yes. But if that boosts your fund overall to a $500 million fund, we get a piece of that, right? Yes. That is called leverage, using other people's money to make money. They become your partners and fund of funds. So you see, having a track record and being stable in the stocks that you choose and your various hedging strategies gets you more money. Now, let's back off for a second and talk about you. Are you the type of person who's someone who's constantly putting $500 a month into their TD Ameritrade account, their Schwab account, or their E-Trade account? Because if you can put in a steady $500 a month, you are displaying essentially financial discipline. The person who says, oh, I just want to be rich, how can I be rich? They're not displaying any discipline. They're engaged in fantasy. Because fantasy without action doesn't result in wealth. You get it? So if you're the kind of person who's very disciplined and doesn't mind doing the same thing with their money over and over and over, paying your bills, building up your savings account, and then putting money into your brokerage account or retirement account on a regular basis, you are financially disciplined. So let me help you out when it comes to dating and picking a partner. If you pick a partner that does the same thing, the two of you would have to be wealthy in a 2 to 5 year period, because you keep putting money away in investments, particularly if you're using the wealthy investor approach, that double. So in a 2 to 5 year period, in a very short period of time, you and your partner are going to amass some amount of wealth. Those stocks go up, they pay you dividends. You're going to take a great amount of ease and pressure off your relationship. But let's see what happens if you're the person who puts money away and your partner, boyfriend, girlfriend, spouse is not doing the same thing and doesn't believe in doing that. Well, you have a one-sided relationship as it relates to discipline. Do you get it? In the universe, what happens all the time is like attracts like. Same attracts same. So if you're someone who believes in financial discipline, you deserve a partner who believes in the same thing so that you guys can have financial ease together. And I got to tell you, every time I do our live Maui event, I'm so inspired by the couples who work together because they're disciplined. They'll never be pie in the sky. And that's why when I have that event and I have the opportunity either during the event or after to come off stage and actually meet people, they say, yeah, we actually own 2 houses. We have a retirement account, a stock market brokerage account. How do they accumulate all these assets? Because they have the same mindset, the same money belief. So it's easy to move forward with someone in life if you guys share the same ideas. If one person believes in working hard and the other person believes it's playtime every single day, not a relationship that's going to work, because you share 2 different core beliefs about lifestyle and money. So if you're single and you're listening to this podcast, be sure to choose someone who shares money beliefs, the same money beliefs that you do. Okay? So being financially successful outside of being a thousandaire really isn't that hard if you're committed to the stock market and learning how to choose really good investments in the stock market. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Today we're talking about billionaires, because who wants to be a thousandaire? Nothing wrong with being a thousandaire. Hey, it's Tyrone Jackson. We're back. Tyrone Jackson from thewealthyinvestor.net. I know some of you really listen to the show, and I just want to take a moment to say I really appreciate it, and I hope you find value in every episode. In fact, I know you find value in every episode, because when you listen to each episode, it's like reading a book, right? So if you can get through a whole book's worth of knowledge here in the time that we have together on various aspects of trading and investing, that's a good thing. Hey, by the way, if you find value in this show, why don't you share it on social media? Tell other people that there's this guy who explains the stock market to you, and it's free. All right, I'm all for free education. Hey, let's get back to the stock market, where we're talking about billionaires and discipline today. So we looked at Robert Smith. You can Google him. Bill Ackman. You can Google him. These people look like regular people. If you saw them out in public, you would never guess that they're billionaires, because they're not driving around in fancy cars and they're not camera crews and pretty models following them. They live a low-key life because they've built their reputation on what? Discipline and producing consistent results. One of my other favorite billionaires is a guy named Paul Tudor Jones. Now, he is phenomenal. His net worth, vacillates between 7 and 8 billion, and he's been trading in the stock market for over 40 years. And what I love about Paul is his analytics, very smart at analyzing stocks, and where he shines is understanding trends. Now, this gets really interesting because we're in a market right now where stocks that are in the technology field are getting the most investment dollars, right? You're not seeing a lot of money flow into retail stocks like Target or Walmart. Well, Walmart's the exception because it's in the Dow, or Macy's, for example. Even though these companies are involved in e-commerce, Wall Street is really looking for the next big thing in tech because that's where the future is. So retail stocks are lagging the broader market right now, not because there's anything wrong with them, but Wall Street is in love, to be very honest with you, with anything that is AI-oriented because it's determined that the companies that are the leaders in AI will lead the economy over the next 2 to 5 years. Now, I don't know if I necessarily agree with that. But back to Paul Tudor Jones. He's really good at investing what I call on trend. So he's probably taking very heavy technology bets in the technology sector. But his real genius is in how he hedges. So I'll try to give you an example that some of you will understand. Some of you have not started actively trading, so this may be a little advanced for you. But let's say I went out and I bought 100,000 shares of my favorite tech company, maybe Oracle, right? Because they pay a dividend and all that. Okay, if I go out and buy 100,000 shares of Oracle, I need to make sure that I have a way of making money if the stock should suddenly drop $20 or $30. So what kind of hedge would I put on? Probably some kind of bear call spread. The bear call spread, a lot of you know, that's when you're buying one option and selling another option, right? Because if the stock should suddenly drop, right, from its current trading level, that bear call spread allows me to capture 100% of the profit. Now, we don't do this in the Wealthy Investor Program because it's too complicated. I could also go out and buy leap put options against a long stock position financed by covered calls. So that way the market is actually paying for my downside protection if the stock should actually drop over a 52-week period. Now, buying 52-week puts is not something that I like to do. I use other hedging strategies in my cash accounts, but I'm just showing you what a guy like Paul Tudor Jones does. So he'll set up these spreads and he'll have puts and leaps positioned in a way so if the stock runs up $20, he kills it on the leap side. If the stock should suddenly drop $20, he kills it on the downside. So what I like about his style is that he's a master hedger using spreads. Almost all hedge fund managers these days sell covered calls because it's an easy strategy, right? When implied volatility is high, Paul knows to hedge up on the upside or the downside. How does he know this? He's been doing it for 40 years. You don't get to $8 billion or $7 billion in net worth if you haven't developed the skills. He's lost billions of dollars along the way so that his skill set is now arrived at where it is now. Just like you, if you're interested in trading and investing your own money, please don't have the expectation of every stock that you buy is going to do exceptionally well. I can help you choose winners, right, by explaining the stories to you. But that doesn't mean that I'm right on every single stock. What I love as an influencer and a trusted authority is I am right a lot. If I had to assign a percentage to it, it depends on the market, but I'd say I'm right 94% of the time. Now, I'd love to tell you that 94% of the time, the stocks that I recommend go higher. That doesn't make me a genius. I'm kind of cheating a little bit. Why? Because all of the stocks that I recommend are in the Dow Jones Industrial Average or the S&P 500. So I'm not choosing no-name companies. So if I just choose from that pool, what's going to happen? I'm going to have success more often than not. Just like when you learn to choose stocks that are members of the Dow Jones Industrial Average or the S&P 500, you'll have similar results. okay? The other thing I like about Paul Tudor Jones with his net worth of about $8 million on any given day. By the way, your net worth goes up and down based on how stocks perform every single day. That's why they have a range on the net worth. The other part that I really love about Paul, he's one of the first guys to get there as a trader. Almost everybody else has been long-term investors, including the number one investor in the world. You know who it is, Mr. Warren Buffett, with a net worth of $121 billion. Now, Warren Buffett is a brilliant stock picker, but why is he at $121 billion and everybody else is around $8 billion, $4 billion, $3 billion? You ready? It's because of time. He's held stocks for 40 years. Forget the 5-year time frame. When you hold Coca-Cola, one of his largest holdings, by the way, for 40 years, and the company continues to pay a dividend and has top-line revenue growth, 40 years holding the same stock and adding to it over time, now who wants to be a billionaire? So, why don't you make it your business to get good at trading and investing in the stock market? Not every day will be exciting because markets go up and down and they fluctuate. But over the long term, you and I are going to call long term 2 and 5 years, you're going to see a noticeable difference. Why? Markets tend to rise more than they do decline. So you should be inspired today. If you're a thousandaire and you have money in the stock market and you're picking stocks well, you are definitely on the way to being a millionaire as long as you give it time. And if you're a covered call writer using the wealthy investor approach, you never run out of money. You never run out of income because there's always call premium to accept and there are always dividends to collect auto-magically. Hey, listen, that's the book for today. You don't have to go out and read all these fancy books that explain all these theories to you about the stock market. Know that if you hold stocks, dividend-paying stocks, that are members of the S&P and the Dow Jones Industrial Average, you've done what most people will never do, which is take control of your financial life, create wealth and financial freedom by striking that balance between being a trader and an investor at the same time. Thank you for spending some time with me. And if you're out in public and I see you at the airport, say hello. I love to say hello to people who are interested in wealth building. With that, I hope that I get a chance to meet you live and in person at my next event. Have a great week. You have a lot to look forward to in the next 2 to 5 years.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.